Safeguard Scientifics is a holding company with a 57-year-old rich and colorful history, providing growth capital to entrepreneurs. Over the years, it's deployed billions of dollars of capital and has supported hundreds of companies. And there are some real winners in that list of hundreds of companies. Novell, Cambridge Technology Partners, Internet Capital Group, Canbay, QVC, DocuCorp, and a whole host of others. Through Safeguard's innovative subscription rights offering, we've actually enabled those companies and dozens more to go public on the stock exchanges, on the U.S. stock exchanges.
When you look at Safeguard, when you really start to peel back the onion, what you'll find is that we have this rich history of innovation, this rich history of being a real market player in creating real value in sustainable companies. And what we've been trying to do now is to leverage that brand, leverage that experience, and bring together the new generation of a team that was launched 4.5 years ago by Peter Bonney, a team that embodies both operating and financial management and strategic capabilities that allows us to put dollars to work in an enterprise and legitimately have an opportunity to create real value for our shareholders by generating exit values that are usually 3 to 5 times greater than the dollar that we put to work. And why is that? It's because we actually are able to practice what we preach. We bring together this financial and operational management expertise that is enabling us to augment the skill sets of the management teams of our respective partner companies.
Many people look at our business model. We deploy capital in new and interesting situations, build value, and then realize the value with a well-timed exit. And they say, well, aren't you like a public venture capital vehicle, or aren't you a public private equity firm? There's some similarity to the model, but there's lots of dissimilarities as well. For instance, we don't play quite as early as the venture capital community. We don't play quite as late as the private equity community. Somewhat of an in-betweener. We're in early enough that we have the opportunity for a 10-bagger, but not in so early that we're likely to face a goose egg based upon some happenings inside of an organization. Now, from a shareholder's vantage point, you can put in a little bit or you can put in a lot. If you were a limited partner in a venture capital fund, for instance, you also have two choices: put in a lot or a lot more. Here, you have immediate liquidity. There's plenty of trading volume. You can get in or out, or in, out, and back in again at any time, as opposed to waiting several years for distribution. And recognize this is a firm with New York Stock Exchange corporate governance and all the transparency that comes with that. So as opposed to cloaking our whole operations with a good deal of secrecy, we tell you what's going on.
Typically, we're looking to put capital to work in diagnostic companies, both molecular and point of care, medical device, healthcare related companies, technology-enabled companies, and specialty pharma. What separates us is that we're looking to put capital to work in companies that don't have a real heavy, intensive FDA process in front of them that could be onerous, time-consuming, or expensive. We look for companies that have an opportunity to have minimal FDA risk, so it's more of a commercialization opportunity as opposed to a regulatory one. Initially, we like to put in 5 to 10 million of capital, gain a significant ownership, and be a very active pro-investor where we can work with management, work with the team that they have there, augment some holes that they have potentially with our finance, our operational experience, our backgrounds, to really enable these companies to make a lot of progress so that value can be created in the next couple of years while we're working with them.
Our focus at Safeguard is pretty simple. We help entrepreneurs grow companies. Within our technology group, we focus on 3 core markets. We focus on the financial services technology companies, focus on companies that focus on healthcare, so healthcare IT is what we call it. And the third area is what we call internet new media, and that is broadly those companies that are either in the online advertising space, the next-gen internet e-commerce markets, lead gen companies, internet marketing, etc.
Four years ago when I joined, Clariant was doing $11 million a year, had 2 disparate types of businesses and was struggling how to shape it and move forward. Safeguard brought in a new management team, refined the strategy, and we've seen Clariant go from just $11 million 4 years ago to well over $90 million. Strong growth rate that continues to materialize. Companies like Advanced Biohealing that we helped fund 3 years ago, going from a zero revenue base to well over $80 million in 3 years' time. It didn't happen by accident. Safeguard found a way to partner with management, put our resources in place, and really enable and help the companies to grow substantially. We've got other companies that are in the phase 3, the final stages of the FDA approval process. Companies like Abbott, radiopharmaceutical, that can diagnose and image Alzheimer's, amyloid plaque in the brain to detect if there is Alzheimer's present or if it will be forthcoming soon. Also dementia, Lewy body, Parkinson's, etc. In phase 3 of clinical trials that we are expecting some very positive results from them this year. Other companies like Quinova and NewPath have products in phase 3 that we expect near-term successes and for significant value creation to come from that. At Safeguard, all of our companies are achieving significant milestones to help reduce the cost of healthcare. And we believe that several companies in our life science portfolio are poised for significant value creation in the near future.
Safeguard not only has our investment professionals, those who put money to work, but also we have a whole set of operating resources. These are finance folks, legal, operations, marketing, PR, human resources to some extent, that are supporting our companies. So while they're spending maybe a portion of their time keeping the lights on here at Safeguard, they're spending the majority of their time supporting our businesses. And so we are one of the very best places that if you're going to scale your organization and grow quickly, it's our operational resources that can be extremely helpful in helping companies scale their businesses.
We look for 3 things in our entrepreneurs and their management teams. First of all, real passion regarding the value proposition that they're delivering to their customer set. Number 2, some focus. You can't boil the ocean. You can't do everything. What are the 1 or 2 or 3 things you're absolutely focused on to enable high quality delivery? And number 3, surrounding themselves with really good people. Your mother was right many years ago, you're judged by the company you keep. Passion, focus, and people. And with those 3 things, our entrepreneurs are off to really build terrific value.
An investor looking at Safeguard has to ask themselves the question, why is management so convinced that I as a shareholder should own Safeguard stock? And I think it really boils down to one principal reason. Here's an opportunity to partake in the ownership of stock that I think is substantially undervalued in relationship to the value of its underlying assets. I really believe that when you look at the sum of the parts of Safeguard, when you take each of our investments and apply a value to those investments, and then add those combined values together, and then compare it to the market capitalization of Safeguard, you're going to find that Safeguard is probably trading at a 50 to 70% discount to its net asset value. There's at least a doubling of shareholder value by just looking at the cash that we have, the value of Clariant, which is a publicly traded security, and then take the 4 or 5 top investments that we have today, those that are coming closest to the ultimate exit that they're going to see, and then add those values together. And just those 6 assets, or 7 assets, cash, Clariant, and the other top 5 investments that we have, and you'll quickly come to a value of Safeguard that's well in excess of $500 million. $500 million compared to a $225 million market cap as of the end of December of 2009. That is the story that we're trying to tell to the shareholders and to the investors out in the marketplace. If they understand that, I can see where they'll get really excited about being a shareholder.